So how can you become consistently profitable with a small account and make sure that you don't blow it up and waste your whole entire 3 months efforts? Let's talk about that right now. You need to learn how to spot the high probability trades, medium probability trades, and low probability trades so that you can learn to avoid the medium probability ones and also the low probability ones. When you're trading with such a small account, you only have so much room for error and you cannot afford to take a lot of very stupid trades. So one example is if you're trading with candlestick patterns and you want to increase the probability of your trades, what you can do is, example, you can add in a confirmation indicator, a momentum oscillator. Then the second tip I have for you is don't withdraw the profits. Now, if your small account is like $100 account, you earn a couple of dollars, few extra couple of dollars a month. Like if you withdraw that $20, what are you going to use it for? Unless you tell me, Karen, I go into trading not because I want to trade full time, but because every single day I'm sick of drinking $3 coffee, so I need to drink higher class coffee. People like me only drink $7 coffee from Starbucks. Then you withdraw your profits. But if you're somebody who is like, Karen, I don't have a lot of money, so I start with a $100 account, $200 account. So I want to grow it to a 4-figure account, 5-figure account. Then there's no point withdrawing the profits. Just let it compound, let it grow to 4 figures, 5 figures, so that you can eventually achieve your dreams of becoming a full-time trader. For me, I just feel that if you have such a small account, you withdraw those profits for what? To boost your own ego. If you want to boost your own ego, go and buy a dog. Third thing is that you need to understand that those people who grow their $100 accounts to a $1,000 account, to a $2,000 account, 10K account, whatever the number is, there are either two groups of people, okay? First group is that they must be so good at what they do, man. These people should become a fortune teller or maybe start a hedge fund. Be so good at what you do that nobody can ignore you. They might be the second group of people, which is they have no idea what they are talking about. Now, don't get me wrong, I have been in this stupid place because in my first year of trading, I was doing the same thing. Like I grew $100 to 2K very fast. And then when I go to investment banks, I have the audacity to tell the professional traders, look at me, I grew $50 account to 2,000. Then they are like, oh, okay, so what's your risk exposure? I'm sorry, what? Draw down? I'm only thinking about draw up. I just whack. Only to waste my whole entire 3-4 months of hard work with that one bad trade, stupid trade that did not work out. So the fourth tip I have for you is, if you're trading with a small account, focus less on indicators, focus more on risk management. Chances are, if you have such a small account, most people, based on experience, they won't even give a heck about risk management, what lot size management, what money management. That's why studies have shown that small accounts tend to get blown up faster than larger accounts. In fact, studies have shown that larger accounts tend to survive longer than smaller accounts. And even if you have a large account, you shouldn't focus so much on indicators all the time. Because even for professional traders, they don't use a lot of indicators. If anything, they are looking at fundamental economic indicators. By the way, when it comes to economic indicators, a lot of retail traders, they are looking at the lagging economic indicator, for example, NFP. By the time NFP data has came out, the professional traders already know it, has already made the trade. So by the time you enter into the buy trade, the professional traders, they will take a position against you. And one very important thing about risk management is you're gonna set your stop loss properly. Not too tight, not too wide. Okay, so how do you set your stop loss? There are many ways that you can do that, based on the volatility, based on a recent swing high, based on a recent major support resistance, based on a round number. I've also already done a video on that, you can go find it yourself. So the next tip I have for you is you need to stay disciplined. People always say that how you do one thing is how you do everything. So how you trade a small account would translate to how you trade medium and larger size accounts. Because if you're not disciplined with a $100 account, how do you expect to be disciplined when you have a $500 account, when you trade with a $1,000 account, $2,000 account? So how do you stay disciplined? There are various ways that you can do that. The first one is have a proper trading plan, have a proper back-tested system. Doesn't matter if you learn it from a mentor or you crafted it yourself. And when the price hits your stop loss, be willing to take the loss and move on. When there are no trades for today, just don't trade. Don't go and force a trade. That is also discipline. And one of the hardest things is to prevent yourself from trading, because if you don't have a trade today and you go to Instagram or Facebook and then you look at your friends, they are killing it today. Then you look at your own account and then you're not making progress, then it's very tempted to make a trade. Now, if you're still a beginner trader, you're still in your first few years of trading, and you're struggling with discipline, which is not easy to have, don't beat yourself up, because even experienced traders, they struggle with discipline. Even I myself, some days when I don't have a trade, I still feel the temptation to want to make a trade. A very important reminder for you is your small trading account is not an account that is used for you to get rich quick, to trade full-time, to quit your job, to do whatever dream that other people sell you. Treat it like a practice account. Practice how to trade live. And to those people who want to hear nice things, who feel that trading this way is too slow, then go and listen to people who promise you get rich quick. And if anything, go and learn it the hard way. If you don't want to learn it the easy way, learn it the hard way. So if you want to learn how to craft a proper trading plan, I've done a cringy video in the past. You can go and check it out. So with that, talk to you in the next video. Bye.